All right, the recording has started. Again, just for the sake of the recording, I sold US 30 this week. This was my markup, and this is how the trade played out, expecting one more drop. I sold CAD NZD and Euro NZD. So now we will go look at some charts and start discussing how to mark up according to market structure. All right, if you got something to take notes with, we'll start now. Let's look at AUD USD, and we will mark it up from scratch. The only thing you need to mark up a chart using market structure are trend lines, and some people will use a horizontal rate or a rectangle to show their supply and demand zones, okay? So when we're looking at market structure, we start what we call top-down trading. We start on the higher time frame, which is the monthly. And what we are going to do is try and box in or trap the price down to the current time and see what it is doing from top to bottom. So we take a trend line. I'm gonna go through this real fast and then go back through and break it down. So we're boxing in the monthly. We go to the weekly, and we can take a trend line and box in the weekly. We go to the daily. You can take a trend line and box in the last move on the daily. You can go down to the 4 hour. You can box in the last move on the 4 hour. Now we have trapped the market. Where we have the market right now, it has two choices: to either break through, continue down here, or to reject like it did before and push up. So at this point, we would start looking for an entry on the lower time frame. Right now, we're getting a correction. Looks like it's making a reversal pattern, so we could see one more drop down. And so that's how you box in the market from top to bottom. All right. So I'm going to mark that up one more time, starting from the beginning, and I'll explain the way we draw our trend lines. If you're writing on the screen, please don't mark on the screen. It's probably someone on a phone and you went in to zoom in. So just when you go to zoom in, try not to zoom to right on the screen. All right, the rules for a trend line. Two touches makes a valid trend line. 3 touches verifies a trend. Never cut through wicks or candles. Never cut off a forming candle. Okay, those are the most important rules for trend lines. Okay. So if you want to write those down, you can write those down. Hey, Stevenson, welcome. I'm going over market structure from top to bottom. When I finish this, I'm gonna let you take over because I know you probably got a lot to do. So again, we're drawing our trend line from the monthly down to the 4 hour. We're going to the most recent move. We're not concerned with all this past action back here. We're trying to trap in the most recent move. So we got our monthly time frame. We have 2 touches, which gives us a valid trend line. We didn't cut through any wicks or any candles. And I'm going to show you why. If you cut through a wick on a candle on a higher time frame, when you go to your lower time frame, this is what you're going to have, because it takes 4 weekly candles to form a monthly candle. You just threw away 179 pips on that move. Okay, so we're going to go back to the monthly and clean that up. So we went from the wick to the new forming candle. We'll go down to our weekly. So we're just boxing in the market We're going to get price action, and we will react to price action. Go on our daily. Now, if the daily had not closed, I would not have done this, but it's the end of the day, and this candle has finished forming. Remember, on the rules, we never cut through a forming candle. And we can go down to the 4 hour, and we have one more trend line we can draw here, because we want to see if price is going to bounce and break, or break through and continue to the upside. All right, the reason I'm going to pause right here, we do have a special guest on tonight. You probably know him from iMarkets Live TV, Mr. Stevenson Lindor. And I would just like to say thank you to Stevenson for joining us tonight. I'll let him tell a little bit about himself and his history in trading, and just let him take control and do whatever he feels like doing tonight. I owe all of my trading skills to him, and I'm going to stop sharing. And Mr. Lindor, you can take over and do whatever you feel doing tonight. All right, I unmuted you. Are you there, Stevenson? I'll try to unmute you again. All right, Stevenson, you're unmuted. Can you try again? Okay. All right, Timothy. Oh, Lindor, it won't let you speak. I have you unmuted. Can anybody unmute and speak? Someone try to unmute and speak real quick.
Can you hear me?
Hello.
All right.
Yeah, I'm here.
Hello.
All right. Lindor, did you try to jump off and jump back on? Yes, we can switch to your Zoom. If you can start your Zoom and drop the link here in the chat, we'll all switch over. Okay. So don't anybody jump off yet. He's going to post a link, and then we'll all jump on his link. All right, I'm recording. Could you ask your question again?
Could you explain on the EUR NZD why, no, where, what candle you entered on and why?
Okay.
And did you catch that whole thing?
Yes, I entered. Let me look at my price here and tell you where I entered. 1.67141. So if you want to check your entry, you can draw a line here. You can go to settings, coordinates, and 1.67141. So you see where I entered?
I do.
All right. And I did enter off the 15-minute time frame. And from there down, it fell 124 pips. I moved up my trailing stop loss, and I saw it had bounced off of this channel. And I took profits, and I did enter the buy because I also trade Fibonacci. And if you put a Fibonacci on it, we typically get 50 to 61% retracement. I'll take profit about here. All right. So that's where my entry was on that. On NZD CAD, I'm still in that trade. I'm going to hold it for a while. Let's see. I had been selling it. So I sold it last week from up here, but I did a re-entry around right here. And the reason I got out is it had been consolidating for a while. But after a long consolidation, you usually get a long drop. I'm going to use this right here. This time I got in at 91671. So I sold at the top of this flag. I saw the flag had finished forming, and I got in and wrote it down. So
Okay, how is it that you know that the flag is done forming?
87 pips. Okay, if you look at each different pair, they all have their own personalities. The flags form the same. When you are looking for a flag, let me get my trend line here. When you are in a sell, you got a sell, a flag can form up, or a flag can form sideways, okay? Inside that flag, you're gonna get top down movement, okay?
Mm-hmm.
If you look at previous structure, this one usually gives you a straight line. This one had started pulling back a lot. Usually after like this was the third fall, you get a deeper correction. So you got about a 50% retracement here, about a 23 here, but here it pulled all the way back up. And then when I saw it break the trend line and create another flag, I got in here at the top. I was just watching for the formation. When I saw it starting to make a bullish engulfing, I mean a bearish engulfing, I got in this candle right here because this is my entry right here, and I'm still in. And it's bounced off the 38 and it's coming back down. For my take profits, I'm gonna try and hold it all the way down to here at least, and possibly, oops, 0.87 is what I'm looking at. All right, so going back to market structure, let me check my messages and see if he's messaged me again. I'll let him know that if he gets back up and running, this and this is linked. About every 2 weeks, I'll have like a 6 or 7 figure trader come on and talk to us about their strategy or their mindset or how long it took them to get to where they're going. So if you go to my YouTube channel, I have a couple of people on there talking. But looking at flags, that's a sell, and it's the way a sell flag and a buy would be the opposite. It could either flag down or it could flag sideways. Now the market moves 3 ways. You get an impulse, a correction, and a continuation. Whenever you get an impulse and correction, then you would buy the continuation. If you were having a sell and you got an impulse and a correction, then you're going to sell the continuation. So let's look at NZD CAD from the top. You see here we had an impulse, a correction, and a continuation. So you could have sold at the top of this flag, you got a shorter move, and then it sold off again. So if you missed the impulsive move, so if you had missed this impulse and you had got in here, which is the safer trade, you would have caught 115 pips. Let's see how long that took. Let me do a cleaner. If you got in here and just bought it down to here, sold it down to here, 117 pips in 5 hours, okay? Trading off the 15-minute and using price action and trading off the top of a flag that was forming to the downside. And same here, you had your impulse and correction. If you sold from the top of the flag and held it down, you would have had 144 pips in 1 day, okay? So that's why it's good to learn flags and how to enter off of flags. Let me see. Somebody wanted to look at GU. Now, this pair, I'm not going to completely erase everything, because one thing I've been doing lately I've been looking at the market and how it moves on certain days and certain sessions. It's got a little messed up on me, but I need to go back and fix it. You know what? It looks like it needs to be redone, so I'll just take everything off. On Saturday
You
morning,
could hide it. Just
Huh?
hide it. Just hide it.
well, that's a lot of hiding. Like I got each day, whenever I wanted to see how usually you get a big move on Thursdays with the GBP pairs. But see, you had a big move on Thursday here, big move on Thursday here, big move on Thursday here. Here we had news and it shot up and then it dropped back down again on the next candle. So you could have got a buy and a sell on that. But yeah, I got a lot marked up on here. I've been studying this pair just to try and learn its behavior. But marking up again, we'll start from the monthly and work our way down.
Gwen, let me ask another question, please. The when you hold something over the weekend and say you're in the sell, like you're holding that CAD, you expect it to pick up at the same place on Sunday night? Or
No, because international transactions do still occur over the weekend. One thing you can do on Sunday, you can go in here to www.xe.com and see what the exchange rate is for NZD to CAD. So the current exchange rate is 0.9097, which it'll change a lot before Sunday because the market just closed. So it has dropped 6 pips. It's now at 0.9091, so it has dropped 6 pips since the market closed. And that's again because there are still transactions that take place over the weekend even though the market is closed. So that's why you can go in on Sunday and see, like, GBP pairs a lot of the times open up with 40, 50, 60 pip gaps. And that's because they still do a lot of business transactions over the weekend. All right, going back to GBP USD, we will go on the monthly. And we are going to box in price by doing what we call a top down. So we're going from the top of the market, which is the monthly, and we're only concerned with the most recent move. All right, it was in a downtrend, it corrected, and it came down and it's bouncing off support. The GBP pairs have been moving real weird lately because of Brexit. So we don't know when Brexit's finalized. If it's a good deal, it's gonna, all GBP pairs will shoot up. If it's a bad deal, all GBP pairs will shoot down. Okay, now we'll go on the weekly. Again, we go from wick to wick. 2 touches make a valid trend line, 3 touches make a valid trend. We do have 3 touches, so on the weekly, GBP USD has been on a downtrend. But we see here it has gotten to a major demand zone. And I'll explain the difference in demand and supply in just a minute. Okay. Going down to the daily, there's no need for a trend line, but you can use 2 different ways to show your zones here. You can either use the horizontal ray, which some people like to use. So you do still have room to drop to past price, 400 pips. And if you don't like doing that and you want something on a bigger level, you can use a rectangle and draw your zone over like this. Now, a demand zone, checking my messages, sorry, is where buyers take control of the market. The supply zone would be the opposite. Sellers take control of the market, okay? So if we look here, what happened here? Buyers took control, buyers took control, buyers took control. So we could see it drop down one more time and buyers take control. If we look at this area right here, we have sellers taking control. So this would be a supply zone and a demand zone on the daily. You can also draw a couple more lines through here if you want to show this area, because you always had resistance coming through this area. So you just choose if you want to go with the rectangles or if you want to go with the horizontal rays. It's up to you. So this pair here, whenever it's getting to this area, we're looking for buys. Whenever it's getting to this area, we're looking for sells, okay? So right now we could expect a break through here down to, and one thing about TradingView, it does act a little weird on the weekends because the market is closed. So we could see this pair do two things. We could see it correct up and then break, or we could see it break and then correct up. So that's why the trend lines are important. The trend lines do not control the market. The trend lines are invisible to the people who move the market, but it helps us trap in the market and see what we're expecting the market to do. So if you wanted to trade this pair, you would just box it in and wait and see what it does next. On the 15-minute time frame, it looks like it's exhausting here and it's getting ready to come back down and retest down here. And that's 100 pips to this previous zone right here. So if you mark it up with your trend lines down to the 4-hour and you wanted to trade this pair, now there's two ways the market's going to move here. It's either going to move aggressive or corrective. This is an aggressive move. This is a corrective move where you see all this consolidation going on. So right now it's moving like a consolidation type move. So that's why we could see it do that and then continue down to the downside because it's not moving up correctively. Now, if you see it come in and do something sharp like this and break your trend line, then you're going to continue, you're going to start looking at buy opportunities. So if you were to see it break and retest, then you would buy, and that would be, and we've been looking for the buy from the bottom. That would be a really good buy because from here up to our past zone would be, there's 1,700 pips there, and that's just looking at the 4-hour. Now that's not going to happen overnight, but once you see this reject and give you a strong push to the upside, which I'm still expecting it to drop down here, just based on the way that it's moving right now, unless we get news, of course. We can see it come here and then shoot back up to the upside right here. Is this starting to make sense to everybody? Those of you who don't trade market structure. Yes, some flags are shorter. Like you'll see on GBP, the flags were completely different than AUD USD. Okay, oil, do you do US oil or I know there's several different oils, Eric, which one do you trade? Okay.
Think about it.
refresh this. Is there anyone who doesn't use TradingView to mark up?
I don't use it.
Okay, the reason I like to use it is because whatever I do on here when I'm logged in on the app, if I'm somewhere, I can log into the app, and if I want to look at what I've marked up, it's transferred over to my cell phone. It gives you a cleaner look than the MT4 on your phone. So, you know, if you mark up on MT4 on your computer, it doesn't transfer over to your MT4 on your phone. Whereas if you mark up on on TradingView here on your computer, when you use the TradingView app on your cell phone, it's going to be there. All right, so.
Thanks, that's good to know.
All right. The most important time frames are monthly, weekly, and daily, because they give us an overall picture of the market and let us know our trend. The market moves three ways, and that's impulse, correction. The old folks, the old traders call it extension, and today they call it continuation. I like to call it extension because then I can remember the acronym ICE. So if you want to do a safe market structure trade, you would do impulse, correction, and then trade the continuation. All right. As investors, which is what we are, we trap the market and react. Okay. So we're going to mark this up and we're going to react to price. We keep moving this and forgetting where it is. So again, trend lines, we do not cut through a wick. Sorry, let me mute my phone. And we go to the most current price action. We're not worried about what goes on here because this is June 1999. This is November 2008. So we're just looking at the most recent move. You had an impulse, a correction, and it's making a continuation. So it made a big drop. If you look just even on the monthly, you got impulse, a correction, which is a flag, and a continuation. What do we have here? Another flag, and it looks like it's making a continuation. If it drops there, ooh, gas will be really cheap. But it could also, even though this is on a higher time frame, it could push up off this flag one more time and come back up to here, which would be $75 a barrel. Right now, it's at $50.86 a barrel. I need to, I get excited looking at all these beautiful flags and went all over my trend line. Once you learn to trade the flags, it makes a big difference in your trading. You can really get some good entries. That entry that I took off Euro NZD, I didn't really have a stop loss because I could have got in there. Sometimes we have 7 to 10 pip stop losses because we have such tight entries using market structure and the flags. So we're drawing our trend line. And see if you look at the most recent weeks, oil hasn't been moving a lot. We've had a lot going on here. We don't need another trend line here, but I am going to mark this off and this off. So I would know where I would want price to drop to sell it to if it broke here, or where to buy it to if it rejected and went back up. All right. On the daily, it's fallen so hard, I still wouldn't draw a trend line there either. Right now, it's starting to make a flag on the daily. It's just been consolidating a lot. And this is a corrective move or consolidation. It's nothing aggressive. So if you're trading this, I know it's volatile, so it's probably paying you good, but I'm sure it's a pain in the butt because it's only moving, yeah, well, it's a lot for oil, 368 pips on the 4-hour each way. So if you were trading this, you would buy low, sell high, buy low, sell high. Never get in a trade in the middle of a zone like this because you don't know which direction it's going to go. But if you see it hit this and start going up because this pair pays so much, you could get 300 pips each way. We did GBP, JPY like that for about 2 weeks. Trading tray, I will mark up about 25 to 30 pair, but I will only take maybe 3 high quality trades. If I'm going for some swing trades for that week, I'll look at my best setups and trade those because I would rather get 2 or 3 trades with 200 or 300 pips each than to take. The more trades you take, the more you're risking yourself and exposing your self to being in the market and losing money. All right. So that's what's going on with oil right now. It's consolidating. And if I were to trade it, I would wait for these zones right here. You got your sell and your buy, but here in the middle, you don't know what it's going to do next. So it's not good to get into the middle of a zone. Now here, it looks like it's going to drop again because you have a sell and it's creating a flag right here. So it could drop one more time and come back to that zone. But if it does bounce off here, now if it comes through here and breaks and corrects, like impulse correction, then you would sell it down further. And let's see what your next zone would be. I think that would be a break of that flag on the weekly that we were looking at. Yep. So if it breaks through this, don't sell it immediately. Wait for it to break, correct, and then go down. It won't be that big because we're looking on a weekly chart, but you get the gist of it. You would actually do that on a lower time frame. If it broke through that zone where it is now, off this trend line here, that's the move you would be looking for. Now, if you get an aggressive move up, like a big bullish candle, and it comes back and corrects, then you can buy it all the way back up to probably right here, your previous area of consolidation. All right, does that make sense? Right now, I really like, I trade gold a lot, and I like trading US 30 a lot with a small lot size. Euro, Swiss franc, that pair consolidates a lot. If it moved today, it's because we had Euro news. I had told somebody to look for it to bounce and sell, and I see it did that. I don't trade it, but somebody had asked me about it. So it did it, pulled back up to the trend line and sold off. So let's mark it up from top to bottom. You're welcome. All right, top to bottom again. If anybody just jumped on, our 3 most important time frames are monthly, weekly, and daily. And we start with the trend line, and we box in the current move on the monthly. It was a sell and a correction to the upside, and now it's bouncing off the trend line. On the weekly, we can draw a trend line here and see how price is going to react if it pulls back up here. So you can have a big push to the downside on a higher time frame, but everything that sells must correct and everything that buys must correct. So you could catch 200 or 300 pips on the lower time frame off of a correction of a higher time frame. So getting down to the daily, we can already see that price has been boxed in here. This area right here. The last time it came down to here, it had an aggressive move to the upside. It pushed up 3 days ago, but not as strong as it did here. So we could see it come down one more time. Yeah, it's already starting to lose momentum. Usually whenever you have a breakout, you'll have a push and then a retest and then your second push. And anytime that a trade is trading itself into a corner, you're going to expect a big breakout. So this is really in a really tight zone here. So you could see this if it breaks out and corrects, buy back up there, break down here and correct, sell back down there. And the way you would get your take profits, yeah. If you look right here, you had a huge push to the upside at this price of 500 pips. So if I were you, I would want it to drop down to here because that would give you a really good buy. And if it pushes to the upside, you could see it push back up to here. And that would be from where it is now, 732 pips. So this is what you want to see happen, is a big impulsive move to the upside or a big impulsive move. This right here is an impulsive move. Let's zoom in on that. This is an impulsive move, correction, continuation. It corrected up to your trend line and then started creating flags on the way down. So the way you would have traded this pair, if you were looking for impulse correction, right here it had gotten to a previous supply zone. Remember, supply zone is where the sellers take control of the market. If you look left and you can't see a previous zone, you need to go to the next higher time frame. All right, looking left, we see why this sold off, because this was a huge downtrend and then a huge correction. So we could really see a big drop. It could pull up one more time and then drop, but we'll eventually see it come back down here because that is a huge, something caused this to have a huge drop in one day of 2,300 pips. That was probably Brexit. So Euro is also affected with Brexit since it's the Great Britain withdrawing from the European Union. So that's how you would trade this pair. Because it's boxed in, you would box it in on the lower time frame, let it break and buy it up, or let it break and sell it down. I don't know if you scalp. If you scalp, it got here and it rejected. So you see what happened the last time it rejected there. Now, talking about flags, give us our clue. You get a flag, continuation, if it's a sell. Here you had a flag and a correction, which gave you a continuation. Here you had a flag and it corrected, but now you got something like this going on. And then you got a strong move to the downside. What this did here, it gave you a flag, but then it started making what we call an ascending channel. So if we take all this off, so I can draw that for you. See, Swiss franc pairs consolidate a lot and they don't make really pretty flags. So that's why I was saying you have to get to know that pair and how it moves. A flag will either give you a sideways movement on a sell or an upways movement on a sell. But if you see it do this and then start oozing down like this and not holding structure, you're going to see a reversal to the upside. And it's going to be the opposite with a buy. If you you see you had a buy and a flag and a flag, and then it started doing this right here. And that's why you're getting this. You probably see it come back down to around here, which is corresponds with this area right here. So it looks like it's going to sell down to here one more time right now on the smaller time frame, which is another 40 pips. All right. Let's see what we got going on in the chat here. Do you oil your chef? Facebook, I'm just on there as Guinevere Ramos. I'll post that shortly. If you get into a trade and it drops way below you forget to set a stop loss. Hey, Sarah, do you mind unmuting and asking that question so I can understand what you're saying? I said Sarah. My phone thinks I said Siri. He came on. Sarah, are you still there? You can unmute yourself if you want to ask. Joshua, market structure is easy to learn if you draw up the charts and it starts training your eyes, but it's getting down to the entries that is the hard part. And I do cover entries sometimes, but we have some new people on that are just learning market structures. But some evenings, some Friday evenings, we do cover entries a lot. Let me try to unmute you, Sarah. Sarah, can you speak now? I wonder if it's my link. I've had a couple people that were able to talk. So Sarah, I unmuted you and it didn't let you say anything. Are you still there? Okay. Let me reread your question. See if I can understand what you're asking. If you get into a trade and it drops way below, you forget to set a stop loss. If it starts to rise up, maybe rise to say above 5,100 pips we originally wanted, are you still making money or have you lost it all? That depends on what pair you got in, where it is in the market. I'm gonna tell you the truth. I never started making money until I allowed myself to lose money. When I started setting stop losses, it frees you up to take better trades and it keeps you from blowing your account. So sometimes you got to lose money to make money. That's the best I can say. Some flags look shorter. How do you know when the flag is ending so you can enter the trade? I'll look at that in just a minute. I answered how many pairs do I trade and what do I favor? Honestly, what I favor is, like I said, I go through and I mark up 25 to 30 charts, and whichever ones look like they're going to give me the biggest move for the week. And that's based on market structure. If I see something that I think is at a strong reversal point, I will definitely trade that and try to go. Because like with GBP CAD, I caught 400 pips in like 2.5 days. Those are the kind of moves I like to get. So does anybody else have another pair they want to look at? Yep, I had US 30 marked up and it actually played out.
Let's check UCAD back out.
Okay, let me show him my US 30. The way I marked it up like 2 days ago and I caught 3 drops off of it. This is, if you want to mark up on TradingView, this is good for you. Like I caught this move, then it corrected back up to the trend line, and I told everyone to start looking for the sell there, and it sold. So I told them I expected at least one more drop to down here. So if you press play, it will show you it sold, retested, and then sold off again. So right now it's sitting here, and that is a flag. So we could see it sell one more time to this area. So going back to it, and for those of you who don't know, CAD moves based on oil prices a lot. It moves without oil, but oil moves it heavily. Any oil-related news, whether it's on Forex Factory or you hear something about tariffs or oil dropping, yeah, I'll look at gold in just a second. Georgette, that's funny. But yeah, on US 30, I had marked it up. And this pair I only scalp because these pay well. Like if you caught this, that's 556 pips in 5 hours. I didn't buy any of this because I was expecting it to correct. It made a big correction. Okay. And then it started creating flags. So you had a sell, and it created a huge flag. Now, when you start charting flags, you can draw a trend line under them. The safest way to trade a flag is to draw a trend line. And when you see it break through, you can get in, or you can start selling it. You see how it had started making a little channel? Sometimes flags will make a little channel. And if you're selling, you're going to always try and catch it from the top. Usually you can draw Fibonacci on flags. And you see it gave us to the 61.8 perfectly there. And then sold off. So whenever you draw Fibonacci on a flag, start looking to re-enter between the 50 and the 61. I haven't done any sell and buy limits and stop orders lately. I've been doing market execution. And the reason why I shared a screenshot to my private chat a few weeks ago, the market makers actually have a software that they can look into the market and they can tell how many pending orders there are, what people's stop losses are. That's why whenever you're entering a trade, you have to be careful where you set your stop losses, because everybody almost basically uses the same stop loss when they trade market structure. And like if I took this sell here, this is going to be a big stop loss because it's going to be up here. All right. But like if I got in this sell here, my stop loss would just be right above this, just a few pips, because it has come to this area and rejected and sold down. Okay. So if I sell here, I'm going to set my stop loss here in case it pulls back up a deep flag like it did here. If I sell here, I'm going to put my stop loss above the previous flag here. So your stop loss goes based on previous action. And so like if I sold here, I would just put my stop loss right above this because it broke out of that flag and sold off. So I would put it right above the flag. AUD pairs usually don't move aggressively. GBP I wouldn't want to trade those right now until Brexit was over. If you're new at learning market structure, let's see, AUD CAD. Oh, somebody asked for USD CAD. Oh, look, my trade went out. Dang it, and I missed it. Somebody had asked me about that one last night. I missed that too. Because I don't trade everything. I mark up everything, but I don't trade everything. But that's why it's good marking up on TradingView, because when you come back to it, your trades are there. So I missed 73 pips. Oh well. I had sold it up here and it started consolidating a lot and I got annoyed and got out of it. And I ended up getting on another trade. It's dropped 200 pips, but it took it 11 days to drop those 200 pips. Whereas if you trade GBP CAD, you can get those pips in about 2 days, those same. So like right here, if you caught this sell, you got 227 pips in less than a day. That's why some pairs move more aggressively and pay a lot better. All right, let's look at USD CAD. And of course, everyone knows when you're trading to look at Forex Factory and see if you have any news coming up. Now, when I filter mine down, I filter down the red and the orange. If you're looking at a certain pair, you can just look at CAD and USD news and apply the filter. So you can expect big movement on CAD, USD CAD Wednesday. Until then, we'll probably get a lot of consolidation unless something happens. So let's see. I had sold this a couple days ago and got 100 pips, and it's pulled back up to the same zone again. So I got out of it. I'm probably going to stay out of it until it breaks this trend line. Because right now you see every time it hits that trend line, it's pushing up. It pushed up, pushed up, pushed up, pushed up. So until Wednesday, when we get that CAD news, you'll probably just see some more of the same action. And it will be very annoying because you'll probably just see it come here again, and then boom, or either come here, and when the news comes, shoot up and at least come back up to here, or it could come back up to here, which would be just 60 pips to the upside. Now, if you've ever watched USD CAD, whenever there's CAD news, this pair is the queen of fake outs. That first candle will come and it'll shoot up, it'll shoot up, it'll shoot up, and then it'll turn right around and go bam and knock you out of your trade. So that's why whenever there's news on this, if I trade it, I put a big stop loss, which I don't like to do, or I just would give it a few minutes to let it determine which way it's going to go. Yeah, I'll have to look for that screenshot and post it in the group. I posted it in my little group of people who are under me on my Markets Live. But the market makers that make these big moves, they, like, somebody has a pending sell order and they'll sell it. Like here, if you miss this impulse and you want to jump in here, you don't want to set your stop loss like here or here or here, because they could give you a fake out candle and come knock you out. See what they did here. Here's a prime example. They pushed it to a previous high. Okay. Then what they do, they brought it down. Let me give this a good look on here. They pushed it up here, brought it down, and they pushed it up, trying to take out stop losses. Then it finally broke. But here they had people thinking they were going to be in a buy, and what did they do? They reversed the market on them, because here this is a beautiful impulse to the upside and a flag. But remember, I told you if you get an impulse and you get this funny looking stuff going on here, that it's going to reverse. And so that's why if I had gotten this buy, when I saw this, I would have gotten out, because I knew the market was going to reverse. That is a pattern called an ascending channel. So you got your impulse and your flag, then you got another impulse, and instead of making a flag, it gave you an ascending channel. Ascending channel is a reversal pattern. Anytime you see an ascending channel, look for a sell. And anytime you see a descending channel, look for a buy. And I'll show you an example. It's how I caught over 120 pips on Euro NZD. This had been trading in a channel. So when it got up here last night, it gave that strong push. If you look, it didn't give me a flag. It gave me an ascending channel. And I posted in my group last night, and I told them to get ready to sell. And we sold today and got over 100 pips. I posted this in my group last night. Yes, I do trade exotics. USD try is one I like to trade. Supply and demand zones. Some pairs, like if you were looking at USD CAD, they have a lot of consolidation going on. That's why I use the blue as opposed to the and I'll draw it up from, and you can do, I know people who don't like to use this, but you see all that consolidation. It's hard to get a good clean shot by using just a trend line. Like I know some people like to go on a higher, they'll go on a higher time frame and then they'll go to the line and then they'll put a line here and they'll put a line here. All right. If I switch back over to my candles, yes, it gave me a good touch. But you're not going to always have, you see it got here and broke down, it got here and it could break down again. That's why drawing a zone in those areas gives you more coverage of where you could see a possible reversal. Because sometimes, like here, it pushed to the upside here, but when it came back down, it didn't get all the way back down there. So if you had drawn your zone like this, you would know when it comes back down, it could get close to this or it could drop. I'm trying to think of one that we had earlier that had a good zone. Like here, we drew the zone. Because right now, this could reject off this trend line and go up, or it could break this trend line and come down. That's why I like to draw the zones, because you have all this consolidation. If I had just drawn like one line here, it's not going to give you a perfect touch every time. Sometimes you see it got here and push down. It could get here and push down. So you just have more coverage area of where to start looking for your reversal. Like here, it pushed up here, but this time it broke through and pushed up from way down here. And that 105 pips, if I had went just on this line, from here to here is 105 pips of zone you would have missed. So hopefully that explains that. And again, a demand zone is where the sellers, is where the buyers took control of the market, and a supply zone is where the sellers take control. So I like to use just the raise on the larger time frames, but when I get down to the lower time frames, I do like to use the rectangles to give me a better picture of where to look. Now, once I draw it up, like this is a pair that I'll start looking for to reverse soon because it is dropping down to an important zone. So I will start watching it on a 15-minute time frame to see what it's going to do. Right now, it's making an ascending channel, so I would expect this to come down one more time. This was a corrective move. This was not an aggressive move. If it were going to be a buy, you would have a big candle up, then a retest, then a move to the upside. This, you just got a bunch of correction going on here. So expect it to drop back down to here. And when it drops there, it could break on down to here. See here, you had an impulse, correction, continuation, correction, continuation, correction, consolidated for a while, and drop back down, and just, it could test this area because here it shot up, or it could break down to here and shoot up. So I am definitely expecting this to continue dropping down because here you got some nice little flags going on here. And now you got an ascending channel going on here. So expect it to come back down. Does that make sense? Why I'm expecting it to come back down? So it could come down to here because you had a big push up here. And if you look on a higher time frame, see it's attempted to break up there and it's came back down for the retest, and it's been falling a long time. So that would be a good buy whenever it happens. I mark up every Saturday, at least by Sunday before the market opens, Trey. And let me see if I have my notebook here real quick. I keep notes on everything I'm looking at for the week, and I'll put the days it's expecting news. Like I can turn my camera here. And let me see. Can everybody see my notebook? I'm trying to turn on my camera. Does anyone see my camera at all?
Yes.
Okay.
Yes.
All right, I keep notes. Can you see? I'll write the pairs I'm looking at and what I expect them to do in the days that we're going to have news. All right, and I'll go through all the pairs, and I'll show you the way. What I do for each pair is like
So you're
I'll
more
mark.
swing trader?
Ma'am, did you say am I a swing trader?
Yes.
Yes, but you can use market structure for scalping as well. Okay, so if I've marked up the Australian dollar, and I see that the Australian dollar made an impulse to the downside, it corrected, and now it's continuing to the downside. But if you look left, the last time it got here, it pushed up, so it's looking like it's trying to push up again. So you can see some consolidation before it comes back down to this area.
We don't see your screen.
You can't see
I
your.
don't see your screen.
Well, I forgot I stopped sharing it when I let me share it again. Whenever I turned on my camera. All right, I was going to check and see if we have any Auld news coming out this week. I like to mark up each currency by itself to see what that currency is going to do. We have Auld news on Wednesday, so if you're trading any Auld pairs, you could definitely see some action on Wednesday. So on Wednesday, we could see it drop back down here, finish this drop, because we have had an impulse. And the reason I drew this trend line last week was to see if it broke, and it did break. So it was creating a flag and it broke. So we could see Auld come back down to this zone right here. Let me see what kind of news. So the unemployment change, if you open up the folder, it'll tell you what they consider good and bad. Change in the number of unemployed people during the previous month. Actual greater than forecast is good for currency. So last month, that's why we saw the Auld get stronger and the AUD USD was in a buy because the actual came out a lot greater than the forecast. The forecast was 19,000, it came out 32,000. Here it was 44,000. So the projected this month is 20,000. So if it comes in higher than that, that's going to be good for the Auld, and it will give it a push to the upside. So we could see it get here to this previous area and shoot up. But the reason I do this, I want to see what type of behavior I'm expecting out of Auld. So if I'm expecting Auld to go down, then Euro Auld would be a buy and AUD USD would be a sell. So let's just say for the first few days of the market, because I know the news isn't coming down out until Wednesday, I'm expecting this to keep dropping to this zone. So, and if I have the Auld getting weaker and the dollar is still getting stronger, where it's actually consolidating. The dollar's consolidating and CAD, which is why that pair has been consolidating a lot as well. So if I expect Auld to be getting weaker. Yep, Auld USD has been in a sell. So I would look to probably sell this off until Wednesday. If the news came out good, then we could see it reject off the supply zone and shoot up to the upside. Does that make sense? Why I would be expecting that move? Or does anybody have any questions about that? So if you look back, and the reason I have my trend line here, as long as it's under that trend line, you know we have a downtrend. This was from the previous week. It bounced off of that and shot up, but it's still creating a sell pattern. You had your impulse, your correction, continuation, and it's making a correction. You can see it drop down one more time. And if you look at AUD by itself, it's basically doing the same thing. So it sold off, had a correction, it broke and corrected again. It's rejecting at this trend line, so you can see it come all the way back down. And so whatever this does, AUD USD should do the same thing. All right. So that's what I do on Saturday. I mark up Auld by itself, then I would mark up CAD by itself, and I would go down the line to Swiss franc, the dollar, the yen, the New Zealand dollar, the euro, and the Great British pound. And that would tell me what I expected those currency pairs to do. See, CAD had been on a steady decline because of oil prices declining. Remember, we saw earlier US oil had been on a big decline. And if you go back and look at USD CAD, it had been on a big uptrend because oil was losing value, and CAD was doing the same thing oil was doing. All right. Anybody else got any questions or a pair you want to look at? I think somebody asked about gold earlier. Let me get to that one. When do you use 1 hour, 4 hour for market structure? The only time I go to 1 hour is when I'm drawing like a trend line to see if it's in the downtrend or uptrend, to see if it's going to break. Because some pairs do look cleaner on a 1 hour versus a 4 hour. Let's do gold. I hadn't marked this one up lately because I've been trading the US 30. On the monthly, let's take everything off here. Trying to move my screen over. On the monthly, we are in an uptrend. Now, if you look left, you can see looking left. The last time it got to this price, it pushed up there. Then it got here, same place it is now, and pushed up. So we had a push up, a correction, and a continuation. So we've had a push up here, correction, a continuation, and it's slowly pushing up to the upside on the monthly. It's not making anything aggressive yet. Aggressive is, let me go back to the monthly. Aggressive is this move right here. Here it's been making just corrective moves, nothing aggressive. It hasn't moved a lot lately, and it is the end of the year. On the weekly, we could box in this downtrend, and the only reason I would do it is because the week ended and the candle has closed, and look how tiny that candle is. Gold didn't do much this week at all. The dollar's consolidating, so that doesn't help. On the daily, we can draw another trend line. Now here, you could draw your zone right here. Here, when it got to this area, this time we saw it reject and go down. This time we saw it act as support and push it up. So this is a very important zone. Here, it kept it to the downside. Here, it pushed it to the upside. because it is not moving aggressively, we could see it reject and come down here and then break through. And that's because I'm not seeing a big move to the upside. But, you know, nothing's guaranteed in the market. See, here we saw a big move, a correction, and a bigger move, but now it's brought back down. This isn't moving anything like past structure. So we could see one more correction before it breaks to the upside. It's already started rejecting. When you look at it on the 4-hour, it's rejecting down. But it's not, again, it's not rejecting aggressive like it did here. But you see here, it trailed off and then came down, then gave us a break to the upside. So you hear my grandchildren playing. They're excited about that puppy. It's right here. You can see it do something like this again. Just slowly come back down to this. And then hopefully give us our break that we want to the upside. And then, so that's my bias right now for this. It could do what it wants to do, but because of the way it's moving, just doing a lot of consolidation. And if you take all this off real quick, let me see something, see if I'm seeing what I think I'm seeing. Let's see. We have somewhat of a channel going on there. Could actually take this one off. I'm sorry. That's my bias to the, did you guys hear me say about gold was trading in a channel here? I'm sorry. I had muted it because my grandchildren got excited about the puppy and was yelling. So let me start back to where I was. Gold has been trading in a channel, an upward channel, which is a sign of reversal. Because here you had a good push to the upside. It created a flag, but then it got here and kept rejecting and came back to this channel again. It tried to push up, but it didn't push up strong. So this has been buying from the bottom and selling from the top, buying from the bottom and selling from the top. So you could see it come down here again and then finally break and give us our move to the upside. And oops, once it breaks through, our next take profit point on this pair be right here at 1263, and then about this price range, 1276. So if we get a good rejection off of this channel right here at the bottom, I would buy it and set my take profit to 1263 and trail it, because it could get here and reject again if we but if we extend this out and it keeps up, it could cross into that 1265 area that we're looking at right there. And you were asking why I like TradingView. When I mark up on TradingView, anything that I put on here, it is saved. You've seen how I go back and I can, if I post ideas, see how well it played out. Also, anywhere I go, I can be on my work computer and log into my TradingView and see my markups. I can be at my friend's house, log into my TradingView, and see my markups. And I can look at the app on my cell phone versus the MT4 on my cell phone, and it will still have my markups and what I expect it to do. Another thing on TradingView, like whenever you look at, you can go on here and look at trading ideas. So if you wanted to see what people had to say about gold, you could look at trading ideas. So I see this person has it hit, they got that same channel drawn that I do. And I mean, I've never looked at this, but I see he's got the same thing as me. He's got this channel. He's expecting it to pull up to that channel and break down how far his trade got. So there must be one he just did. So yeah, I'm expecting it to come down and then hopefully break through. But just remember, if you hold on one second. All right, I muted everybody. You can unmute yourself if you have a question. So yeah, anything I mark up here, I can have access to it anywhere that I log into my TradingView account. It has a lot more tools and stuff that MT4 doesn't have.
Mama G, I got a question.
Mm-hmm.
Okay, you see where your trend lines is, the bottom trend line?
This one here.
All right, before the second one that you circled on the bottom, you see where it hit the middle? They didn't go all the way down, but it hit a little bit before it went up.
Mm-hmm.
Hold on one second. Right here.
This one right here.
All right.
Yeah.
Now when that first happened and I was drawing my trend line, do I go over there? Wouldn't that be wrong? Like if I were to draw a trend line like that.
Actually was no, that wouldn't be wrong, but what I'm looking at it as is hold on one second. All right. This right here was the impulse, and it was creating a flag. And you know, this is just an expanded flag, but then you started getting your descending channel and it bounced off of this. Now, because it didn't take out your previous area, it's still in an uptrend, but it's trading in a channel. And and you know, this is a reversal pattern, so we'll probably see it go down here and then push to the upside.
What I'm asking is, before all that happened, and I seen that part where it dropped, and I was making my trend line right now, do I wait or, you know what I mean?
I wouldn't have drawn a trend line there because I knew it was making a corrective move.
Okay.
The reason I drew the trend line here is because I noticed it had started making a pattern. I normally wouldn't draw this here, but we're looking for patterns in this pattern as a channel. And remember before, when USD CAD was making that channel, we were selling high and buying low every time it was doing that. And that's one thing channels are good for. Look at this. So you got a beautiful channel going on here. We were selling it, buying it, selling it, buying it. You know, I could tighten that up a little bit, make it prettier. But we know that was what, 100 pips each way. Like the other day when I told everybody, remember I was like, hey, it's up at the top of the channel, I'm gonna sell it. I caught 100 pips, but then it started making a flag. And because it's in the middle of a zone, I took the money and ran. Because see, we got a lot of consolidation going on here. But eventually it's gonna break that. And when it breaks this,
all the way down.
Yeah, it will get us good 600 pips.
Man, I've been waiting for this pair for like probably like a month now.
Because you see you had your impulse, but you never had a good correction. It's just making all this consolidation in here. But it still hasn't really broken through the previous high. Look how low we are on here. Because we got an impulse. This is on the daily, the correction, the continuation. And this is just all a part of this bigger. If you have been selling it and buying it on the daily, you got a pattern inside of a pattern. Just look at that. If you had hold it up here, down to here, you'd have been getting 600 pips on the daily. And see, and your predominant moves have been your downtrends. And here, this is that last, remember we were selling it from here. Now it started making this uptrend and we're selling it from there. And we've been, how long we've been trying to catch this thing? It's been getting on our nerves.
Like almost a month now.
See, here, it was climbing up and we were buying it up. And now it's just made a smaller pattern inside of a pattern. And here, it had a pattern in here. Sell, 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 sell. It's just making a smaller pattern inside of, this was on our weekly. We're getting 600 pip moves here and 100 pip moves here. So it's going to eventually break. When it does, I hope I get it because it's been getting on my nerves. It's been definitely getting on my nerves. See, it tried to break here. That was news. But it had broke. And remember, we all got it in this. We're like, hey, we got our flag, let's sell. And we got our sell, but it never did come through and break our trend line. So, yeah, it's been giving us a headache for a while. Oh, how am I using the Mac? This is something I just started looking at. And I use market structure. I very rarely use any moving averages or anything unless it's to help me determine an entry. So if I were looking